Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we turn to Jamaica, in particular, two of those high-flying cross-listed stocks, NCB Financial Group as well as JMMB Group Limited. And we take a look at the performance of NCBFG's full-year financials as well as that 6-month performance of JMMBGL. Now, are those stocks fairly valued? Are they offering good investor value? Let's take a look, and we turn quickly to NCBFG. And for their financial year ended 30th September 2019, the group delivered earnings per share of just around the equivalent of 62 cents TT, which was a commendable improvement from that 58 cents per share delivered in the prior comparable financial year. Now, net operating income was up just around 30% from 3.5 to 4.6 billion TT dollar equivalent, and that was driven by improved investment and banking activity segment performance, up around 15.7%, as well as the consolidation of Guardian Holdings Limited, that acquisition of a majority stake, which drove insurance activities, or the net result from insurance activities, up just around 280%. Operating expenses, however, increased by over 49% from 2.2 billion to approximately $3.3 billion TT equivalent, leading to operating profits actually declining marginally, just around 1.4% from 1.3 to 1.31 billion dollars. Now, profit before taxes, it did increase from 1.7 to 1.88 billion TT equivalent. That's an 8% increase. Adjusting for several one-off items, however, that adjusted profit before tax was actually down just around 0.1% or fairly flat. Now, what's driving some of those one-off items, and how has operating profits been performing excluding those one-off items? Well, it's been fairly flat, as we can see. Operating profits in FY18 to FY19, fairly flat in that red column. Share of profits from associates did increase marginally from 131 to 147 million. But what's been helping the NCB Group's financial performance has been those one-off items, which includes gains on disposals and gains on remeasurements of several subsidiaries and associates. In FY 2018, that would have accounted for just around 15% of overall profit before taxes at 266 million TT equivalent. And in the most recently concluded fiscal 2019, that would have accounted for around 420 million TT equivalent, or about 22% of profit before taxes. At the current price of $10.85, NCB is trading at a price-earnings ratio of around 18.6 times, which is above the sector average of 16.2 times in terms of PE, and offers a trailing dividend yield of 1.6%, well below that trailing dividend yield of the sector on average of around 3.9%. So, on the basis of fairly muted growth in terms of profit before taxes, adjusted for those one-off items, and fairly lofty valuations, Bourse maintains its neutral rating on NCB. Turning quickly to JMMB Group Limited, and the group reported earnings per share of just around 8.4 cents TT equivalent, which was a whopping 33.6% increase over that 6.3 cents TT equivalent in the prior comparable period. Now, pretty much a good news story all across the board. Operating revenues were up just around 25.6% from 469 to 589 TT equivalent. Operating expenses increased by a less than proportionate amount from 320 to 372 million. Overall profits for the period did increase from $104 million to 141 odd million TT equivalent. Now, we can see a nice consistent upward trend over the past 3 comparable periods for profit before taxes for the group, from 118.2 million in the half year 2018, which is the 6 months ended 2017, to their most recently concluded period, that's PBT, or profit before taxes, of just around 201.8 million. On top of that, we see improving margins from about 28.9% in terms of profit before tax margins from that half year 2018 to the half year 2020 level of 34.2%. So improving both in terms of overall revenue generation as well as margin maintenance. Now, one of the most notable drivers of growth in the coming quarters will be that acquisition of a 22.6% stake in Sarodh, and that is partially being funded by an additional public offering of shares which recently concluded for the group. Now, the results preliminarily were in, and it was a success to say the least. The total number of shares which are ultimately going to be issued are 325 million, which is upside from the initially reserved 266.74 million. Overall, there was well over 500 million in shares subscribed for, so there will be some proration in terms of the number of shares investors would have bid for relative to how many they receive. The total value of bids were just over 19.05 billion, or about 134.2 million US equivalent. And in terms of allocation, they would have allocated just around 93 million US equivalent, with around 15,000 in total applications from investors received. At a price of $2.27, which is 17% above that APU price of around $1.94 TT, JMMB is trading at a price-to-earnings ratio of around 17.2 times, which is well above the sector average of 12.5 times. The dividend yield is not too much to get excited about at this point in time. It's about 1% relative to the sector average of 3.1%. So JMMB is positioning itself as a growth stock, and let's hope that growth materializes to get these valuations more in line with the sector and provide much more value to investors. So on the basis of growth in terms of profit before taxes, but tempered by fairly lofty valuations relative to the sector, Bourse maintains a neutral rating on JMMB. That's it for this week's edition. For more information, you can give us a call at 2-BOURSE or 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.